Hey everybody, it's a stock options podcast. It's a Straddler stock options podcast. We're going to talk about what's going on here in the middle of the day on Monday, June 5th. The update you're looking at up here is about 1 p.m. Eastern Standard Time, prices of the stocks. And I just want to go over what this algorithm gives us and what kind of action it's telling you to make, and what you're supposed to purchase. So, and I've already done half of this transaction, and we'll see if I can complete the second half on the company that I believe it said is the best thing to choose today, right now, which is Palo Alto Networks. So let's talk about how all of this rolls together. What you're seeing here is a list of 7,643 companies on the NASDAQ and the Dow. This is them looking at them by market cap. I don't know why Collier's International Group is worth $4 trillion, but it says they are. Apple, Microsoft, Alphabet shows you how far they move. This is just kind of a overarching look at what the market's current status is today. 44% of companies are advancing, 56 declining. The net change in overall market value of all companies is estimated at $133 billion in the positive. So that's really showing an up day, even though not as many companies are advancing as declining. It's still a positive day for money coming into the market right now, today. That's what that's saying. And then we have here is this options pivot table, which refreshes and shows us, based on how companies have moved today, what the best companies were to straddle. Meaning, if you purchased an option in a Medicis, they received an offer, unsolicited offer to buy their company at $100 a share. So they've been up $11 today because they're kind of approaching 100, given that I guess they have the option to sell to another company at $100 a share, sort of. There's a lot of other legal mumbo jumbo and red tape that goes on there. That's not an immediate deal or something that would be happening, but it is, that offer is what's moving their strike price. So I thought, well, is this a good company to invest in here for this week, to do a short-term option on them because of this volatility? Not so much. And here's why. Couple things the algorithm is telling us here about to stay away from this, even though it's on the top of the list, because they've already moved $11 today. That's $1,100 in option value. They moved today already, but even though their options are only $458 right now, why wouldn't you do it? Well, there's a spread range, meaning like how far apart the bid and ask prices are, or what people are buying versus what people are selling at. So you don't have a really good idea of what the actual cost is, because this spread range is bad. And that's also impacting the ABS rating, which is 33, which is not good. You want the ABS rating to be below 10 and below 5 if possible. Like, here's some really good ABS ratings with IBM, and Palo Alto Networks is at 5. So let's talk about Palo Alto. So what happened here, and this is the one I decided to buy today, and I still need to buy the put, but I have a call option on them. So here's what happened. Palo Alto Networks, it is announced that they got added to the S&P. They're bumping Dish Network off, I believe. And the reason why is their cybersecurity firm, their revenue is increasing in a world where cyber is everywhere. And so for some reason, they've been going up, 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 and the S&P realized that and said, all right, we're adding you. So they have a sharp increase today of $12. Well, they only need to move here because they're a $230 share company, basically. They only need to move another $7 in either direction from now until Friday. And on that kind of news, that's more sustained gaining news that they're being added to the S&P, because once you start throwing a company on there and they get weighted into that average, they become sometimes a forced buy for certain people that are taking samples of the S&P and the companies that are on there. So that usually has a sustained gaining impact and effect on the company. And there will also be profits taken on them, as they have increased a lot recently. I've seen them come up on the top of this list at least 3 times in the last couple of weeks. I remember seeing their name. So this is very reasonable, which is why that ABS ranking is not that bad. So I already bought one of these options. I spent I spent $315 for the $230 strike price call option so far. And now I need to buy a 230 put option. And I was waiting to see if they keep going up a little bit because I'll get a better deal on the put option. This is how you do this every day. This is what you have to look for. You want to try to get deals and you want to pick the right companies. So I don't want to pay $375 for this. I'd actually like to pay $300 for the put option. I'm hoping that Palo Alto Networks continues their gains today and goes up over 230 so that I can buy this put option for less, because this thing will drop down to like $300 if they can get over 230 today. So we'll just keep an eye on that. If they don't get there and they go down in the other direction, well, there are certain things you can do, because you should really just buy them both at the same time and not worry about it. But when there's a company that's moving so much and it's kind of hanging around a price, you can get a deal if you put in lower bids on them, and eventually the price will move in your direction if it circles around a number for a while. And so while I think that the overarching direction of Palo Alto Networks will be up because of their increasing revenue, the need for what they do to be used by government agencies and big companies, and cyber is huge. I mean, cyber is just the world is fighting wars on the cyber playing field, and so I understand why this company is going up, and that's why the S&P added them, right? So I think they will continue to go up. So I'm glad I have the call option on them, but I also need to have the put, because that's the way this strategy works, is you have to have both sides of this. So Palo Alto was the one I chose for these reasons. They moved a lot. They're not as expensive. They have a good spread range, meaning you have a good idea of what you can buy and sell this option for at any given time, because there's a big market for it. They don't have to move that much, under 3% by the end of the week, and their ABS ranking is good, and they're a high share price. Lots of reasons to buy them. We'll see when I can buy the put option, really, hopefully before the end of the day to complete that. Now, what else on here before we look at the losers on the day? Well, Apple, like I said, big company that likes to move. They do have to move $6. They got to move over 3%. You'd like it if a big company has to move less than 3%. So they're just a tiny bit expensive, but the ABS rating says they're still a good buy because their spread range is so low. You always have a good idea, and they're probably going to keep moving. And yeah, so they're okay. Netflix, more expensive, worse ABS rating. They haven't moved as much as they need to today. So now we're getting into companies that haven't moved as much as they need to move. Spotify, once again, up here, though. I keep seeing them a lot. But their ABS rating is terrible because they're expensive options, and they have to move 5%. Intuitive Surgical, that's another one I like. And I was thinking about buying. $3 today, huh? So they only have to move 2.3% for you to make money. Let's take a look. I think I updated those option prices yesterday. They're probably pretty close to what it costs. 22. No, I mean, the ABS rating says it's just a little bit too high. They need to move a little more, and the spread range could be a little bit lower, but it's okay. All right, so on the gainer side, you got Tesla, Costco, interesting one as well. Look at Costco's share price. Costco was another one I was really looking at. Look at the numbers on Costco, because I think Costco is going to get bought by me today too. So here's what's interesting about them. Let's double check their option price real quick. I'm going to look them up online just to make sure, because that's an important thing to know. So Costco, for this week's expiration period at the $515 strike price, it's $475 to $500. 515, 475, 500, yep, 335 and 355. And what that does, see where that moves them. So it moves them up, makes it even better. So yeah, so they're only $833 for the rest of the week. So what's interesting about them is look at how little they need to move. 1.6%, right? They're a company that's a $500 a share company, and you just need them to move $9 between now and Friday. The spread range is good. This is one of the best numbers on here. And they already moved half that today on a low moving day for them. So this is buyable. And I actually think I'm going to buy this right now. The spread range is so good that I'm just going to buy them. They're just, it's just really expensive or inexpensive, I should say, relative to that share price. I mean, if you think about what you spend $800 on, there's other companies that you would spend $800 on that are much less in share price than Costco. And while Costco, I mean, they move more than you would think. That's the thing. They actually move more than you would think. So I'm just going ahead and buying that at the 515 right now. I'm going to do it at the market rate. I'll have to do it after the video because it's annoying right now. But anyway, point is to see things on here like this and to really do the analysis shows you a lot of these companies are going to win. You know, we're picking some off here, and because I think they're the best based on what I'm seeing in the numbers here, and I'm looking at the ABS rating, but a lot of these win. A lot. I would say I really don't know how many because we don't freeze it at any given time to check, but yeah, a lot of them win. So let's go to the very bottom for a second, see if there's anything on here. This EPAM is down a tremendous amount, but it's expensive. And also the spread range is not great. It's okay at 9%, but this company, I don't know. They announced bad guidance or something like that. I didn't get a full-on reason. I don't know enough, and it is pretty expensive for a $200 share price company. You know, MicroStrategy. So Bitcoin must have taken a hit or something. MicroStrategy now moves more than it needed to. Double check the price of that, but being tied to Bitcoin in a lot of ways makes them move weird and in big directions, which is why their options are so expensive, right? I mean, look at that. These options are 2.5 times as expensive as the Costco ones, and MicroStrategy's share price is half of Costco's, right? Like a little more than half of Costco's. That's why it's amazing what a deal Costco is. And I'm going to end the video and just buy Costco and take care of that. So and also Lululemon's down. Yep, that makes sense. After they were up a ton on Friday. Anyway, so in summary, you can see how it picked Palo Alto networks and for good sustained reasons. And it's picking things like Costco, which I'm purchasing today because of this really low break-even number and a reasonable price and a high share price. I know the ABS rating is not below 10, but that's because it's like $800 a share and they haven't moved a tremendous amount today. But a $516 a share company moving $8 or $9 is not anything spectacular. And if there's any big news on Costco that moves them significantly in any direction, like 3 or 4%, you're making over $1,000 really fast because they'll move like $20 a share. And that is what I kind of think will happen on one of these weeks. And you're actually risking less than you think. On a slow day, they're moving $4. So this is a really reasonable pick. Just like Home Depot and Caterpillar were last week, which have also been going in the right direction. I sold the Home Depot and Caterpillar calls last Friday, making money, and now the puts are starting to make money. I mean, it just does work. It's just work. Caterpillar. Am I not spelling Caterpillar right? Come on. Caterpillar? Let's look it up real quick. Nope. I'm looking for Caterpillar here. Yeah, there it is. Caterpillar. Gotta be on here. There we go. They're down $3 here. Like the option. Yeah, I spent $640 on Caterpillar options on Friday. I sold a call for $800, so made $160 already. Now the put can be sold for over $200 because they're down $4 today. It was a 220 put, I believe. So it's amazing how just playing the fluctuations on this yields $350 profit on a $640 investment in 48 market hours. You know, and less than that. It's like 30 market hours, even though it's a weekend. It's unbelievable how catching these companies in the right movement string, it makes it very, very easy to profit fast. And making 50% on your money in a day. If you did that with your entire portfolio for a couple weeks, you would be surprised how much money you have. Now, it's tough to hit all of those all the time so easily and so well. But watch Palo Alto Networks probably make some money. Watch Costco probably make some money, right? Like that's what you're probably going to see. All right, so good luck, everyone. May all your trades be volatile. That's kind of the update for midday today. I'll come back with one tomorrow, and we'll keep tracking what happens because you're just taking advantage of short-term volatility and overreactions in the marketplace and reasonable priced options. And it's very, very easy to guarantee and secure some profits fast and then watch the other side of the option play itself out until expiration. All right, good luck. May all your trades be winning.